Hello and welcome to Pro Trader Strategies market commentary for Friday, June 19th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, and how that impacts the overall markets with some market analysis. Well, I do the same thing in these daily market commentaries, but I layer on top of it option strategies that I find based on the assumptions I come up with from all of that economic, geopolitical, and market analysis. Well, without further ado, let's get on with some economic data. Well, there's really not a whole lot to see here unless you want to talk about Canada. Canada came out with core retail sales way below expectations at negative 22.0, expected to be a negative 12.7. So pretty much a wet blanket for the most part. Regular retail sales coming in at negative 26.4. They aren't buying cars, obviously. Or anything else for that matter, it seems like. Well, here in the United States, though, with our stimulus, we've been seeing a lot of spur in the economy, despite the fact that we're seeing a lot of this slowdown. People are talking about buying cars everywhere and anywhere I go. They are not really thrilled about the whole ride sharing anymore so much. With that being said, here in the United States, all we have to look forward to are FOMC members. We've got Powell and Quarles speaking. Actually, Quarles is probably getting ready to speak right now. Powell a little bit later today. I don't know that we're going to get a whole lot of information out of them. We already saw Powell testifying and really probably said just about everything we needed to hear. Anyway, without further ado, the economic data impacting the markets, well, not really so much. We're seeing, though, crude oil testing that $40 a barrel mark there. As you can see, we're up about 75 cents. Are we going to cover that gap? Remember, that gap is 41.05, I believe is a low there that we saw. I think that this is getting a little ahead of ourselves. Yes, people are buying cars and probably will start spending money on gas then. But the main driver of that really is the manufacturing sector. And as we know, that is really not up and running fully at this point. But this is a future, and they are kind of expecting that to start happening. But we could start seeing some pullbacks in the opening up of, say, for instance, China, as they are starting to see some more cases come out of China. I don't think we're going to see another lockdown here in the United States, though. I think it's going to be a kind of, make sure you are well aware of your health before you go out or do anything. All right, so gold making a move, though, today, up about $23. Remember, I've got on that long call spread, I've been talking about us going up and testing that 1787 area. I think that could happen very soon. I mean, obviously next week. I don't think we're going to see that today, but I think we're going to see this ratchet up a little bit and test that area. Are we going to get to 1800? I don't know. I think that's going to find some major resistance up there at that level. That's just going to be a psychological level that the markets are going to be trying to sell on the bear side. Bulls will probably try and make it move above there, but I think that we are on a trajectory that will make us at least test the all-time high there at 1788.80. All right. That being said, I'm going to hold on to my long call spread in GLD. I don't have it in the futures there, but I do have it in GLD. Bonds off just a little bit, but near the highs of the day, as I think the market should start, I've talked about this time and time again, get back up into that 180 handle. We are about 3 points away from that and in negative territory right now. But that was because we were seeing some equity strength earlier on today. But now that the equities are starting to lose a little bit of steam, we're going to start seeing some volumes lighten up very shortly here, as it is a rush to the Hamptons. We've got summer markets. That means on Fridays, everybody in New York takes off early. People head out to the Hamptons, is what we used to say. Is that still going to be the case here in 2020 with the coronavirus? I think so. I think people are still going to try and get out of the city and try and get onto the weekend a little bit early. It's not just the Hamptons. It's also Chicago. People take off early on Fridays as they see the flows start to lighten up a little bit. All right, VIX coming off again, but that is because we were seeing positive moves here in the Dow. You can see up 135 points, but off of the highs. Went up there and hit that 200-day moving average and then started faltering shortly thereafter the open. We'll see that in the breakdown of the E-mini S&Ps. NASDAQ went up and blasted against this new Fibonacci that I have. You know, I didn't go to the wick. I went to the top because there were two tops there. That is basically where we tagged up against, and that was off the open. Now we're starting to see a little bit of a pullback there. I don't think that we're going to go into negative territory as we talked about with this type of setup. Even if it were to finish here where we are, I still think that trajectory is to the bullish side. When we have those candles lining up, it seems very bullish to the upside. Now, if we had broken down below yesterday's low into a red candle, then that obviously would be pretty bearish. But in and around here, where we've made that move to the upside, all of that being said, I think that the market is trying to climb higher and probably will do that next week, as long as we don't see any crazy breakouts here this weekend. All right, E-mini S&Ps, here we have again on the breakdown of the chart here. You can see overnight inventory, very long. Coming into the day, popped up, tested that overnight high, and then immediately started seeing some weakness come into the overall markets, and it's just really not been able to get any strength coming, and I don't really expect it to happen, especially as we will start to see these volumes lighten up throughout the day. I think that it's going to really calm down and start trading sideways to maybe a little down. I don't think that we're going to get a massive bullish move or a massive sell-off either, unless something really crazy disrupts that whole situation there. All right, let's talk about some trades that I've done. LYFT. I talked about this yesterday in the webinar. We did a webinar on the long put spread, and this is the roadmap to building an option strategy. So I come up with a thesis, right? You and I all do that every day. We come up with a thesis first, whether it's bullish or bearish based on whatever economic, geopolitical, whatever's going on. Well, my thesis in LYFT, as I talked about yesterday in that webinar, and I go into details of, deltas and why we're picking those, and rather than going in and buying it in the money and all of that stuff. So check that out. It's really important to follow that. I think I come up with some really tangible evidence and or reasons why we're doing it the way that my guidelines are. So with that being said, LYFT, my thesis on this was that, I talked about this, cars are being sold, new and used. People are just going out and buying cars. Why? Because they don't want to take public transportation. They also don't want to do ride shares. They don't want to get into a car with a stranger and wonder who was in the car right before them and, whether or not they had corona. And when was the last time this car was really disinfected, right? Well, when you have your own car, you know all of those things and you are on your own. How's that going to do with traffic? I mean, we're probably going to start looking at some crazy traffic jams throughout the nation coming up very shortly as summer starts progressing and we start seeing more and more people out. That is going to be a bit of a bummer because here in Arizona, we call it a traffic jam when you're going only 55 on the 101, which is the major loop around all of the metropolitan areas of Arizona. And it's kind of funny. That is what people talk about, bad traffic. Anyway, especially coming from Chicago, where it would take you 45 minutes to drive 4 miles sometimes. Anyway, LYFT is higher on the day. I do expect this to start rolling over, but because of, I think they're going to struggle going into this summer. I think less and less people are going to be using these ride shares. I didn't pick Uber. Why? Because Uber has a lot more diversification as far as I'm concerned with the Uber delivery for food and stuff like that. So I picked long puts. Why? Because I feel like the volatility is very low right now in LYFT. A bearish assumption could start picking up some of that volatility, and we're heading into an earnings for LYFT. So all of those things being said are a good environment for volatility rising. That volatility increases premium. So I want to take advantage of that with a buying, and I got into the longer duration because I want to limit that theta decay and capture some of that volatility expansion from going into that earnings. So without further ado, I did the August and bought the 35 puts, which is right around in between my guidelines for that, which was a 45 to 35 delta. I think it was a 38 delta when I did that. And I paid $3.50 for it. Did it pretty small. Not trying to put a big trade on there, but I do want to add some negative deltas to my overall long portfolio. And that's how we do it. We try and find some things to add some negative deltas to it, like I did with the SPY. Remember when I did that with the puts and we got that nice sell-off? Well, I think that that's what we're going to see here in this contract as well. Now, with that being said, we don't have all winners today. We have IWM we need to talk about, and that was a full boat loser. You know, hindsight being 2020, I probably should have covered this at the beginning of the week, or probably even better last week when we got that sell-off. I did cover those SPY at a very good level, but I wanted to leave on some negative deltas with this butterfly. It just wasn't really working out. Wasn't able to. It was still actually pretty much a loser. But anyway, I did this butterfly. It's a broken wing butterfly in the June. Expires today, so I needed to get out of it because I was getting ready to have to deal with the, exercising these options and everything else on Monday, and I didn't want to deal with that. So with that being said, if you guys remember, I did the June, and I had bought the 124 calls, sold the 129 calls, and then bought the 139 calls. So you can tell it's not an equal distance. You break the butterfly there. I should have been, a regular butterfly would have been the 124, 129, and then that would have been the 134s, right? So that breaking that wing, I eliminated all risk to the downside, but I increased my risk to the upside on this trade. And that being said, I had to get out for $5, selling it for a $5 debit. Actually paid $5 to get out. So lost the max loss on that. So total loss would be I got to keep that credit for 38 cents and then paid $5 to get out of it. That makes my loss on that $4 and 62 cents. So that was a loser on that. I also did that small, but it didn't work out. Anyway, with that being said, that's all I've done today so far. I'm probably going to sit on my hands for the rest of the day unless I find something really good out there in the market. So let me know what you guys are looking at, and I'll take a look at it too, So with that being said, have a great weekend. Stay safe. Also find that we are an educational company. Go over this disclaimer before you leave, because I'm not trying to give you guys investment advice. I'm not trying to get you guys to buy this put in LYFT. I want you guys to make your own decisions, but what I want you to do is learn from my 25 years of experience in building option strategies. I've come up with these guidelines for you guys so that you can stay mechanical. You go through the process, and that helps us take the emotion out of this trading. All right, so check that out, and if you can't take that, take it easy.